Hello everyone, welcome to Insurance Education. My name, Raymond Macmillan. In today's video, we will talk about an Act of Parliament in the UK called the Insurance Act 2015. This came into being particularly for individuals who are buying insurance in a commercial capacity called non-consumers. Prior to this act, it was the 1906 Act which controlled how risks are presented to the insurer, the completion of the proposal forms, etc. Under the new act, some things which stood out for me, and I think they're very beneficial. One of them would be you no longer sign the proposal form as the basis of the contract between yourself and the insurer. Those basis of the contract for declarations are through the door in the UK. You now sign to the best of your knowledge and belief. The reason why that's important, ladies and gentlemen, is if you made an innocent error in the proposal form, that gave the insurer the right to avoid the claim, even though it was an innocent error. It's no longer the position under the 2015 Act. The next key point under the Act which was clarified was the position in respect of warranties. We know that a warranty is a strong condition. Any breach of the warranty goes to the root of the contract, and the insurer is entitled to cancel the policy ab initio. Ladies and gentlemen, even if there isn't a claim, if you breach the warranty, the insurer has the right to cancel the policy for the breach of the warranty. Here how it operates under the new act. If, let's say, for instance, the insurer imposes a warranty for burglary insurance that at the end of the day's trading you must set the alarm when you're closing the premises. If one night you didn't set the alarm, automatically cover suspends. There's no cover. And let's say the next day, at the end of the day's trading, you now set the alarm, cover under that policy automatically resumes. No endorsement sent hastily to the client, no admin extra expenses to the insurer. I like that. Very good. The other advantage of having the warranty that way is if the policy was cancelled under the, let's say, the 1906 Act ab initio, if there were any claims paid during inception and up to that point of the cancellation, you would have had to give the insurer back the money, because if it's cancelled ab initio, that means no contract existed. Therefore, I should not be out of pocket. Do you see the reasoning? Therefore, I think the new act, the position with the warranty, I think it's a fair position. What I like again about the act is in respect if there is fraud committed against the insurer. Now, you can check any policy. The old fraud condition says if fraud is committed against the insurer, all benefits under the policy will be forfeited. That means if you had a legitimate claim and you were just waiting for payment of the check to be handed over, if you were enticed and you submitted another claim which was fraudulent, you're going to lose the benefit of that check. All benefits forfeited. Under the 2015 Act, the Law Commission says, you know what, that was a legitimate claim and they're entitled to keep the funds for that claim. They're entitled to their check. However, from the date of the fraudulent act, the insurer would be within their rights to cancel the policy if they so choose, not pay the claim, they can keep the premium as well. No more liability for the insurer if they choose to do so. Ladies and gentlemen, guess what? The insurer can choose to forgive the breach, to forgive the fraudulent act under the new act. Interesting. Another point which stood out for me under the new act is now we spoke about, we haven't spoken about fair presentation of the risk. You are required, and this is a new requirement, you're required to send a fair presentation of the risk to the insurer. The information you supplied must be substantially correct. You can't data dump on the insurer. You must send it in an orderly fashion and take the time to signpost or draw to the insurer's attention any areas you think is important. Therefore, the requirement to supply information which you think the insurer would need is the same requirement under this commercial policy as under the 1906 Act. You would have to think what information the insurer would require and submit that information. That takes the form of utmost good faith. If you remember under last week's video, we spoke about CIDRA 2012. It was no longer utmost good faith, it was good faith. But in respect of non-consumers, it is still on utmost good faith in respect of the delivery of information. Finally, with all those benefits under the new Act, do you know the Insurance Act 2015 now allow you, the insurer and the insured, with the broker or not, you can now choose to opt out of the Act and write the policy under the 1906 Act. Quite interesting legislation, ladies and gentlemen. I trust this is helpful to at least one person. If you're studying the CI exam, here's an examination question for you. If you like this video, we invite you to click the like button and why not subscribe to our channel. See you next week. I have another interesting video for you. Thank you, ladies and gentlemen.